Good evening, everybody. Give me just about 1 minute or two to get this presentation loaded. Let everybody trickle in. It's going to be a blank screen. We'll get started in about 1 minute. Thanks. All right, you should be seeing my screen now. Hopefully so. You should be hearing my voice. I have chat up. Reach out, say hello. Let me know that you can hear me. Let me know you can see my screen. Welcome out, everybody, to the Trading Foundations course finale. This was 3 months we spent. Thank you, Bob. Thank you, Fred. Much appreciated. 3 months we spent going through this Trading Foundations course. We are now going to wrap it up with Q&A. And remember that next week we're starting the Options Foundation. The Options course is just 1 month. 1 month, all of December. We're going to be focused on options, buying calls, buying puts, thinking a little bit about spreads, learning how to use an options pricing model to plan and understand your trades. So if you're ready for options, join me for that. We'll have 8 sessions on options, and then we'll start over, and we're going to go through the foundations again. So you have the ability to watch the recordings. If you haven't been into the content library, and Fred, I hope you got my my message. I owe you an email still, but you and I are going to make sure we get you straightened out as far as making sure you have access. I want you guys utilizing the resources. We have a ton of content, a lot of different areas: trading plan development, market forecasting, general trading, various components of that. With the Trading Foundations, now with options, there's a lot there for you to really dive into and roll up your sleeves and get working on your trading, and really build the process, build the routines, build the rules, the record keeping, the analytics, all of it comprehensive. So with that being said, again, formally, welcome out to the Market Watch Group Trading Foundations course finale Q&A. My name is Scott. I will be your host. Can't get Discord to work. Okay. It says it expired. I will send a new one out. Thank you for that. Here's the agenda. No, here's the disclaimers. Here's the disclaimers. Here's the agenda. Q&A. The door is open. Any question. If I need to pull up charts, I'll pull up charts. If I need to pull up the trading plan, I'll pull up the trading plan. If I need to pull up record keeping, if I need to pull up the Market Watch, market posture spreadsheet, whatever your question is, if you're new and you're like, hey, how do I get the most out of this? The door is open. Let's have some fun. Ask me some questions. So let's start with, you finally found the emails. Wonderful. Glad to hear it. Very cool. I hope you can now dive around, figure that out. The Discord, I've sent a couple of links, and I wonder if when I sent a new one, it caused the old one. So there, let me just do this. I'll send another link. I'll just keep sending links. If I have to keep opening new ones, it doesn't hardly take any time at all. So I'll send a new one out. I would love to see you in there, Bob. Everybody else, it's the conversations are getting good. We're having good conversations about trading, good conversations about processes and routines, and the more people we have interacting, the more of a flow of ideas we'll have. So I will let that go. I will put that out there. Next question came from Sandy. She says, why implied volatility? Great question. From a market posture standpoint, when we look at the VIX, that's implied volatility. That's the gold standard. Like, you can go look up, there's a CBOE white paper on the VIX calculation, and essentially what that has become is the gold standard calculation for implied volatility. All options have that calculation, right? Which looks at options over multiple time periods. It looks a little bit in, at, and a little bit out of the money to get like a broad representation of price. And it looks at it now versus where they were historical. So what it's essentially doing is it helps us to understand how our options priced. Now, from a market posture standpoint, we read that as sentiment, because when we look at the VIX, there's a very different rationale or motivation being applied there when the VIX starts to move more heavily. The VIX represents S&P 500 index options, but S&P 500 index options are where a good number of institutions go when they hedge. And when they hedge, they're buying options, lots of options. If you're a market maker, what are you going to do? Raise the price. What is the implied volatility set to measure to help us understand prices and sentiment option prices? So when it sees prices going up, and that's what causes the VIX to spike. Well, in the VIX, it's fear, right? In individual stocks, it might just be speculation. What's an event that causes implied volatility to rise on individual stocks? Earnings. Everybody thinks something's going to happen, so they buy more and more options. As they buy more and more options, what are the market makers doing to the price of options? They're raising them. How do we know? Because implied volatility is going up, up, up. What are they doing? If everybody's buying their options, they're going to end up on the wrong side, potentially, unless they do what? Attract sellers, right? Attract sellers. How do you attract somebody to sell something? Raise the price. How do you attract somebody to buy something? Lower the price. That's what market makers are doing, the little puppet masters. How do they do that? It's implied volatility. What they're manipulating is the time value component. Intrinsic value is empirical. It's either there or it's not. It's strike price relative to current price. But it's the time value that can inflate and deflate. So inflated options, I don't want to buy inflated options. I want to sell them. Spread trading or naked options. I want to buy cheap options, deflated, low volatility. That's why. So I use it very much all the time from a market posture standpoint, right? From my ability to understand, what are the institutions doing? Are they fearful or are they confident? Where are they now? Well, let's pull it up. Let's move around a little bit today, right? So we finished kind of positive. We seem like we're coming out of this consolidation a little bit. Here's the VIX. What has the VIX done? Well, it certainly hasn't broken any kind of consolidation. We've seen it move up a little bit. Does this look like fear is building to you? Oh, look how fearful the market is. Not at all. This looks very stable, very confident. What does that tell us about the institutions? Are they hedging? Absolutely not. Not only are they not hedging, but they have, relinquished the vast majority of any hedges that they did have on back here in October when the VIX was up in the 21s. Remember when we were there, I kept saying, hey, we're still only at 22. If you go back historically a couple of years, you can see the VIX at much, much higher levels than this. We were never at a point where we're like, oh my gosh, this is looking bearish. I don't think our VIX score, maybe it dropped into the negative a little bit. Yeah, one time it dropped into the negative. Just for a fleeting week, it dropped into the negative. And that's when it was up in this area. We're like, okay, yeah, it's not great. It's not great. It dropped a little south of neutral. We never got negative on the VIX. It was never bad enough to. And then you can see how quickly it recovered. Now, if I'm trading individual options, let's go to Apple and say, I think Apple, look at Apple. This consolidation is in place. Our stochastics is in place, starting to turn. What am I looking for now? Just a little bit of price confirmation tomorrow. And I have a signal. Absolutely. Right? That's valid to me. That is a trigger when we talk about trading rules. Where am I drawing? Let me get my drawing tools up here. So what are we looking for tomorrow to say Apple's good? This is already in place as long as we have some kind of a bullish candle, right, that says buyers are coming in. Apple's on the table. Looking for what? Oh, that's a good question. I could look at, I could take this move here. I could look at this as being two different moves. I could say we've got one here, then there was a pause, and then I've got one here, breaking it up into two pieces. But that would give me something that looks like that. So we're thinking Apple's ready to break its old high and venture into new territory, maybe into the low 200s up in this area. That's what I would be looking for. That's my reward. Where's my risk? Probably going to put my stop somewhere back down in this area here. This is risk. This is reward. What do I have? Looks like about a 3-to-1 visually. Yes? Okay. Now that I've looked at this and said, I think this is a trade, if I'm an options trader, my next question is how? Am I going to spread trade this? Am I going to sell a naked put? We have some people who do covered calls and naked puts. That's an income strategy. I'm looking at this as a speculative strategy. So I'm going to come down here to implied volatility, which is my bottom chart. And you can see that my implied volatility right now, very low. Here, implied volatility was quite high. That is where options are expensive. I would be more inclined to do a spread trade, to sell something, versus implied volatility down here. It's cheap. This is as cheap as these options have been in at least the last 6 months, maybe even the last year. Back here, they got just a little bit cheaper. They got down to 18. We're at 19. We are as close as we can be. So I feel great about being a buyer. So that's the other way that I would use options. Yeah, we've got some stuff setting up. There was a little discussion about trades today, what people were looking at. I said insurance, the insurers, Aflac, AIG, PGR, looked pretty good today. But I thought that technology, communication services, some of these, still another day away. And you can kind of see that's what we saw here. But we are definitely starting to see confirmation coming in. Okay, next question came from Fred. He said, when you suggest this is a trade opportunity, how do I decide whether you are suggesting to buy or sell a stock call? Well, that's the thing. And I'm gonna be somewhat veiled, because I don't want you to see this as someone's building trades for me, but someone's helping me to understand how to build trades for myself, right? And so we'll go into some detail, but I'm never going to make it seem like a recommendation. I'll be reluctant to tell you exactly what I do, because people have a tendency to just want to follow that. And so the objective, when I say this is an opportunity, well, some people are stock traders, and for them it's a stock opportunity. Some people are short-term options traders. For them, it's an opportunity to buy a call. Some people are income traders. For them, it might be an opportunity to sell a naked put and be prepared to sell covered calls if the stock gets put to them. So the opportunity really isn't, I mean, all we have here is what? I have a bullish market, number one. Increasingly bullish market, strong. I know what sectors I like. So I have a bullish market. I have 5 bullish sectors from which I can select opportunities. Within those sectors, I have anywhere from 8 to 12 leading stocks, strong, high volume, high liquidity, lots of options, because I'm an options trader. Could somebody maybe find a stock that might be a little better than some of these big ones? Yeah, they won't be liquid enough for options, and I won't want to trade that. So I would rather pass on that and trade the strength and use options to do so. That's my preference. Some people are going to they're going to say, oh, I'll buy the stock. That's fine. Again, what we're saying is we have a bullish market. We have these 5 bullish sectors. We have a watch list full of leading stocks from these 5 bullish sectors. And we start talking about, well, what are we looking for that would create a setup and a trigger? Well, remember, we've talked about bounce trades. I want it to pull back. This would be considered a bounce trade. Bouncing off of what? Support. So I have strength. Buyers came in, took control, made a higher high. Now the selling cycle came. What did the sellers do? Not much. Not much. The sellers didn't do much. Now, I might look at this as a swing opportunity. I might look at this as a position opportunity. I could look at this as a trend opportunity. A lot of different ways to look at this. But what we're saying is this is a transition from sellers. And now all we're waiting for now is the buyers. And when the buyers come, we're thinking that we're about to enter. I want you to look backwards to the left here, right? What we're looking for. Here's one of these like big, strong starting points and then a little consolidation. Big, strong starting point and then a little consolidation. And what comes out of it? Hopefully what comes out of it is 4 months of trend with 6 or 7 trading windows. Boom, boom, boom. And we just every time buy the dip, buy the dip, buy the dip. I tell people all the time, that's going to be the name of my book. Find a bull market, buy the dip. Chapter 1, find a bull market. Chapter 2, buy the dip. Over and over again, right? That's a bounce strategy. What else could we have? Well, if I miss a bounce trade, I might need to shift into a continuation trade. So let me pull up my. I'm gonna turn this off. We don't need this anymore. Let me pull up another stock. Now, what I'm hoping going forward is that I'm a little faster on the foundations presentation so that I leave 10 or 15 minutes and we have discussions like this. This is the Q&A we should have every foundations class for at least 10 to 15 minutes every time. Ask a question. We never know what amazing rabbit hole we're going to find that we can dive down where you're like, oh, wow, that just connected a dot for me. That just crossed the T, that whatever it might be, whatever cliche we may find ourselves accomplishing. Okay, so maybe we're looking at no, not Costco. Let's go through. Let me get this back. That is what I was thinking. My challenge. There you go, Fred. Yeah, but you know, we want you to have the tools to build the plan. What are we looking for? I don't care what it is. I want positive reward to risk. If it's a bounce trade, I think I can get 3 to 1. If it's a momentum trade, I think I can get 2 to 1. What's the difference? Well, momentum's already going the right way. Bounce is like just starting to turn. You're catching it earlier. Catching it earlier means there's a little more risk in the beginning. Whereas if it's already 2 or 3 days in, it's already starting to move. So you have a little more confidence that it's going the right way. So you're not going to get the same reward to risk ratio on those 2 different systems. They're going to have, they have the same basic setup. Whether you're looking for a bounce up or a continuation up, what are you looking for? Strength. Strength. If I want something to keep going up, I want strong. I want the market strong, bullish posture. I want the sector strong, broad market. I want to be in one of the leading sectors. I want the stock strong. I want it to be a leader. I want strong. And then I can expect, hey, yeah, this thing should trend. This thing should continue. And then we can decide, do I trade it for 3 to 5 days, 7 to 10 days? Do I look to stay in for a couple of months and make it a little bit longer term? There's advantages and disadvantages to every system. That's what we're here to figure out. As long as the numbers make sense and you maintain positive reward to risk and positive, expectancy, we're going to be just fine. Okay. What else? Questions? Keep them coming. Great questions. Today we had, let's just, maybe as I go through our watch list, it'll spark some questions. So you can see here, Apple ready to fire. The stochastics is turning. We're just looking for price now. Whereas Adobe We're on day 2 of a consolidation. 2 reds in a row. This is coming down. I could see this thing coming, I would say about right here. That's ideal. This is the last low that I would say I wouldn't want it to go. If it went below this, I don't see it as a pullback. Now I see it as a sell-off. That's too much. If it gets into this area right here, nice. Sellers take a little run, nothing happens, and do we still have time before earnings? If this thing turns in the next 3 to 5 days, we should have plenty of time to catch this one more time, and I'll be looking to. You'll notice, though, look at your options. These aren't the cheapest. These are somewhere in the middle. So you have to be a little more careful here. This isn't just, hey, look at these beautifully cheap options. Okay, noted, right? So you can kind of see here, Aflac took a turn today. Price moved. Stochastics only pinched. I don't have a full confirmation down here, which would mean what? This is anticipatory. Are we willing to anticipate? Yes. Right now in this market, I am. Why? Because I have 4 straight weeks of increasing of strengthening underlying conditions. Because my posture is now firmly in bullish territory. Yeah, I'm definitely willing to jump the gun a little bit to get some trades on, 100%. Let me know how you guys see it. Are you jumping? Are you willing to jump? AIG, same kind of a thing. You can see this one got price and stochastics. Ideally, though, you're in. Not again, I'm not going to get in the first half hour. You know I don't trade the opening range. But hopefully, as you see this here, let me see if I can you would find yourself maybe catching it somewhere closer to this level than up in this level, and timing your entry a little bit. Certainly once we have our setup in place, we can zoom down to just basically say, hey, as soon as I have enough momentum, I'm going to pull the trigger. We had volume. This is a breakout. This could also be considered a continuation. If you entered the trade late, you could put a tighter stop now that you have a momentum candle. Couple of different ways to look at it. These are not breakout trades, though. That's another style we've talked about, right? Is it bouncing off of support? Is it continuing its move higher? Or is it breaking? Well, I'm not looking for something to break out because I'm bullish. The only thing I would be looking for is breaking out of resistance. But we haven't seen that. We haven't seen any breakouts to the upside. We've just seen it kind of meandering a little higher, and then we wait for our consolidation. So right now, what systems would I say from a technical standpoint are most valid? I would say bounce trades, bouncing off of support bullishly, and continuation trades bullishly. Okay, let's keep going through the watch list. Anyone late joining, welcome out. Good to see you. AMD, possibly still in its consolidation. We've seen things developing, though, in other chip stocks, Intel, NVIDIA, etc. Amazon, still waiting for a consolidation. APH, so you'll notice this thing, it consolidated almost in an upward fashion, and then all of a sudden turned, and you're like, wait a second, was this it? Possibly. And if so, I missed it. I'm not going to go after that. You could consider possibly going with a continuation. You can see with continuation, Heiken Ashi is probably going to be your best friend. The way that these charts work to keep you in trades and demonstrate the momentum. If it starts to slow down or speed up, that's fine. I've got enough. I don't need to force a trade or be like, oh, I'll just move on, wait for it. Same thing here, AXP. We said this might be it back here. So it was either that day or not at all. Boeing, same thing. A lot of similarities in the way that those are working right there. BK. This was a theme we talked about last week where we said these consolidations, they may just go ahead and fire off out of here like this and not give you anything else. So the signal was yesterday. If you missed it, now you're 3% behind. So are we interested in that? No. I'm going to look around and see what else I have and say if I missed it, I missed it, but recognize what could I have done differently. Okay. What does changing the candles tell me? These are standard candles. So when I first look at this, I consider myself to be a price action technician, meaning I don't look at indicators. I look at price itself first and foremost. I look at trend. That's assessing it, right? I look at support and resistance. Those are price action indicators. I look at volume. I look at candlestick, and the candlestick, I mean open, high, low, close. So I look at the range of the day. How high did the buyers push it? Those are the things I start with. When you start to assign calculations and values, then you're turning it into indicators. Now it's a technical indicator. Stochastics is an indicator. Moving average is an indicator. Candlesticks, when you give it a name, a doji or a shooting star, engulfing, now there's numbers involved and it becomes an indicator. Heikin Ashis are completely different in their calculation. So candlesticks are just always the same thing: open, high, low, close. The open and the close are the body, the shadows are the high and the low. A Heikin Ashi, the high and the low, if it has one, is the actual high or low for the day, but the body is calculated. So it's an average. It's an average of the previous day. So the open is always drawn at the middle of the previous day candle. So you'll notice this one is at the middle of this one. This is at the middle of this one, and that's there, and they're always in the middle. That's why they never gap. So they're very smooth. It's a smoothing concept to use those averages. This is going to lag, but it's also going to help demonstrate momentum and give us a nice, smooth reference point to do things like move stops, right? When you catch this down, look how you could have just moved your stop, move your stop all the way down, walking down the stairs. Same thing here. Move it up, move it up, move it up. Pauses, move it up, move it up, move it up. Pauses. What are we thinking here? Oh, we could have another one of these 6 to 8 days. And what do? Move your stop. And then the next day, and then the next day, and you're just taking risk out of the trade. It's a beautiful model when it works. You can see that those tend to be 6 to 8, maybe 9 days, which correlates with our concept of a swing trade. So these are great to help us see and understand the momentum, and also to find reference points that we can use to actually manage the trade with. Love the Heikin Ashi candles. Great question. So I'm always going to go. Now, some people are like, oh, I love these. And all of a sudden, that's all they look at. I'm always going to start with standard candles because that is price action. Price is king. It's first. But I'm also going to look at, I mean, you'll notice how often I'll be like, oh, let's look at the Heikin Ashi. Oh, it's not ready yet. Oh, it's doing this. Because it does give me a different perspective that is more oriented in momentum and whether it's going to continue one way or the other. Love it. Good question. What else? Let's keep popping through our watch lists. If a question strikes you, let me know. If you had a trade you put on recently, let me know. BX. So we knew there was strength, a lot of strength in the financials. Yesterday was a signal in Citigroup. We talked about it in the morning. Did anybody take a trade in Citigroup? Because we talked about it. That was one of our opportunities. Looked good yesterday. Definitely could have gotten it, not up here, but maybe down in this area around 45.5. Already moving the right way. Looks good. You can see Capital One Financial looking good. Oil, not so much. Costco. Costco was one we looked at last week. Caught a nice little piece. I still am looking for more consolidation. I'm not convinced. This is just starting. So I'm going to watch and see what happens. Earnings aren't too far away, but we'll see. Copart. Oh, a little bit of a hammer. You can see the sellers pushed it down, and then the buyers came back and pushed it up. This is definitely one that I'm looking for anywhere above this fib extension. If it finds some support there and bounces, bam, on the short list opportunity. CrowdStrike, there's nothing there for us. That thing's way overextended. We're not going to chase that. That party's already almost over. DHI, that was a tough one. I didn't like the doji, and then you have this. I'm not convinced. I'm not convinced. I'm going to watch this one. The home builders are an interesting industry group sometimes. No trades today, Bob says for him. The Dow, look how strong the Dow was today. Bam. EA, Communication Services, just overbought, waiting for a consolidation. Fastenal, Industrials, here's the pullback. What happened today? This thing looks like it is just knocking on the door. So Industrials is a strong sector, and it does seem like we have opportunities setting up there. Gold, a bit overextended. Google. Okay. Right? We said, let's just be patient. I'm anywhere above, I would say, yeah, I'd say about 131. And it touched down there near today. If it just smashes right through this 130 level, just smashes through it, at that point, I'm not like, oh, it's a consolidation. I'm like, ooh, that looks like a sell-off. I don't want to touch that. That looks nasty. So we have to be careful that we predefine what are we willing to see from these sellers. Today, you'll notice here, the selling picked up. Look at your volume. That needs to drop. That needs to, if it can drop and we can keep this at or above this shadow level down here and it just sort of stabilizes in this range, fantastic. But that we can't have selling pressure when we're thinking about, is this thing done? No, there's no reason for us to think that's done with that level of selling pressure still there. Gap slowing down, but hasn't started to pull back yet. Home Depot, same thing. You can see correlation there as they are both retail in the consumer discretionary space. Bob says, I've noticed you don't use fibs very often. Some use them all the time. Yeah, fibs is one of those things. They're interesting. They're unnecessary to me. What they tend to get you to do is be thinking about there could be any one of 5 different, when you think about a retracement, right? 22, 38, 50, 62, 78%. Those are the various retracement levels. Well, I mean, everyone's like, look, it's like magic. Well, yeah, you drew 5 lines. Of course it's going to touch one of them and bounce off of it, especially if you're like, sometimes it's the shadow and sometimes it's the body. Makes it very easy for that to retrofit and work. I mean, you know, how you draw your lines from high to low, from this high point to that low point, that's going to matter. There's a lot of things that goes into it. I like to draw them sometimes just so I can see where would the retracement levels be, where would the extension levels be. But yeah, they're, to me, some people who think they're magic just don't realize that they would come to that same conclusion if they just were conducting a full technical analysis anyways. That's my opinion. So there you go. So what is they sort of seem like magic sometimes, right? You're like, ooh, look how it's perfect. It's the magic ratio. You see it in trees and this, and it's flower petals, and everyone's like, oh, okay. It's cool. It's cool math for sure. I agree. But that's how I see it. Personal opinion. So what is happening to cause the pullback, the rationale? Simply in this case, buyer fatigue, right? That's what we would see it as right now, is buyer fatigue. We're bullish. We've already got everything in place. The short-term, the long-term trend's already in place. Short-term trend's already in place. Is it super strong or just like a good bullish trend? Just good bullish trend. We have sector rotation. We have major market. We have everything's in place. So we don't really need, the market to do much. The pullback here is just simply, as the market starts to kind of slow down because there's less buyers, a lot of the early buyers are like, hey, you know what? I'm going to take some profits. or a lot of the swing traders are going to be like, yeah, let's lock it in. There may be some remnant bears where like, oh, this market, there's going to be a recession, and they short it. I don't think there's a lot of that right now, but there's some. Anyways, and that's why you'll notice that the pullback is fairly marginal. It's not a huge sell-off or down 1%, 2%. It's just like like really look at the SPY, okay? And look at our 1 month daily chart. We're 1 day away from looking at this again. Look at this chart, man. There is literally, these are not, I mean, this is technically, that's a red candle, but that was a positive day. It closed higher than the prior day. And this day closed higher than this day, and this day actually closed almost at the same as this day. So this was a flat day. It's red candle because it gapped up and then gave it back, but it actually didn't drop. That's the only selling candle where it actually closed lower in the last month. One candle, 1 day. Where the hell did the sellers go? Doesn't matter. We don't care. All we know is they're not there. Could they show up again? Sure. Of course, anything can happen. What we're working with is, as of right now, we don't see it. We see good economic data. We see the Fed is becoming increasingly dovish as they stop their hikes. Jobs remain steady. GDP steady. Consumer confidence steady. But we've got a lot of stuff in place. Great. Okay. So hopefully that makes sense for this pullback and why it is that we're looking to trade this pullback, looking to trade out of it, buy the dip. So the dips are always going to happen in these bull markets. It's going to be, like we said, what causes it? Buyer fatigue, profit taking, a hint now and then of bearish speculation that's probably premature. That's what it tends to be. Questions? Questions? Well, I mean, we got 40 minutes here. That's pretty good. 6 minutes left. So let me know what's going to happen tomorrow. We'll meet tomorrow in the last 45 minutes of the day. Quick heads up to everybody who's here now, and I will send this out. I do need to make one of my, just a brief, a small schedule change on Monday. We're going to postpone the start. Instead of catching the open, we're going to go from after the first half an hour. So we're going to go from about 10:05 a.m. to 10:45, 10:50. I have a doctor's appointment that I have to attend to. I am going to introduce another coach to you soon. His name is Gary. I'm kind of walking him through everything that we do. He's going to help deliver the foundations course and run a couple of the webinars, sit in the Discord and add an additional voice. And then when I have conflicts, he'll be able to sit in for me. So you'll like Gary. He's a great guy. Yes, don't forget Tuesday. It'll be very exciting on Tuesday. Interestingly enough, it's my birthday on Tuesday. I get to spend my birthday talking about options. What better way to spend a birthday than discussing options? All right. Anything else? You guys are amazing. I love the group that we're creating. I love when I see the discussions, when I see how people are talking about their trades, when I see the questions. People are sending me part of their trading plans, their record keeping. I hope you see this is why we call it Trading Foundations. This is the fundamentals. We don't get distracted by shiny new things. We do things the right way. We make adjustments as adjustments are necessary. We make sure that we have a system and a structure that can identify and process those adjustments as necessary. I promise this is the way you'll find longevity as a trader. So, thank you. Bob said he was amazed at the options analysis in Thinkorswim. I love Thinkorswim. Thinkorswim is now Thinkorswim by Charles Schwab. I actually worked for Thinkorswim when it was Thinkorswim out of Chicago, prior to Ameritrade. That was it's a lot of years ago now. Ameritrade took over 14 years ago. But it's an amazing platform. If you're going to trade options, I would recommend you have access to it. So that means now is looking into opening a Charles Schwab account to get access to that platform. The platform has phenomenal tools, phenomenal charts, orders, the ability to place and manage orders. It really is a great platform. Yeah, there you go. All right. Well, listen, everybody. Amazing. This is a great way. I had a blast. And here's the thing. Remember that this was just the first pass. Stick around. Let's go through it again. I'm going to improve my presentations. I'm going to take out some of the stuff that I'm like, that didn't go over well, or that didn't flow well. And the next time around, I hope that you just keep coming and sticking around, popping into Discord, keeping your watch list maintained, working on your trading plan, constant improvement. That's the mindset. Enjoy the rest of your night. I will see you tomorrow. And as always, my friends, happy trading.